Donald Trump is a friggin' idiot. Did any of you listen to him talk today? And as the markets continued to stumble, he finally came out and backtracked on the tariffs that he was going to implement. Why is that? Because he's oversensitive to the stock market as opposed to just being the president. Stick around, it should be a great video. Hello, my YouTube friends. My name is Adam Kahn, and this is Investing with Adam K. And I think Dividend retirements. I'm such an idiot that I don't even remember the name of the other channel. I will do my best to make a copy of the link and put it in there if any of you want to follow me there. But to be perfectly honest, it's going to be the same exact video. I'm not looking to do anything else. I just, like I said in some other video, I noticed that the algorithm's been kind of weird. So I half want to start over somewhere else. And we'll see. I mean, I might cancel it. I haven't really quite decided yet. And I'm going to rant a little bit about Donald Trump, but keep in mind, I am much happier that he won the presidency than Kamala Harris. I did not want that, and I'm not really political. I really, in my mind, just analyze things because I'm more interested in the markets and how things affect it. But it cracks me up because even when I think 4 years back how embarrassed I was, because the more he chats, I sit there going, oh my God, I can't believe this guy is our president. Now, that being said, somehow he managed to stay on TV for 2 hours yapping away. And I don't really listen so much. I don't really care. I could tell that the markets were nervous when he was talking. It was like as soon as he was done, they went higher. And I think it's because they're like in this relief of, oh, thank God he didn't say anything else really stupid. And then the market started going lower again as he came out and said he's not going to implement the tariffs he was threatening to, and the market shot back up. And now, again, they're struggling again. So there's obviously some selling pressure. I don't really know where they're going in terms of that specifically. I'm hoping they catch themselves because I think the economy is actually doing okay. But I am going to harp on one thing he said that really bothered me in terms of conspiracy theory and not liking a lot of things that the politicians do. So now, he was bragging about his last administration, how the markets did, even including what happened with COVID, as he started to go on and say, originally we didn't even have the name COVID yet. They were just talking about pandemic. And he goes, and before it was even out and the public had any idea or what was going on, all we knew is we had these satellite images of people in the city called Wuhan, and there were body bags, and we just knew something terrible was coming along. Now, the reason I harp on that, what bothers me about it, is the stock market started selling off long before anything came public about what was going on, the pandemic, and people dying in China. So it bothers me that they had satellite images, they knew something was going on, and the market started selling off, which logically leads me to believe that senators, congressmen, or whoever else was aware of what was going on were the ones selling the stock market. And not to be rude and not to but your job is to do what's right for the American people, not go in there and sell stocks or buy stocks according to the information that you're receiving by being our representatives. Anyway, that's my little rant. I'm now going to go into talking about the stock market, what I see going on. We're going to talk Netflix a little bit, and we're going to talk some other things. So stick around. Still should be a really good video. So let's start with Netflix. It actually came out with pretty good earnings, and the market sold off pretty hard. And why is that? Because they beat on top and bottom lines. Now, everybody seems to think it has to do with the Warner Brothers Discovery thing. I don't really think so, because when you dig into the earnings, I think the real issue was their guidance going forward. Instead of growing at 15%, they knocked it down to 12%. I think you add that along with what's going on with Warner Brothers Discovery, and that's a lot more weighing on the stock. Now, full disclosure, I own some Netflix, perfectly comfortable with it. I actually bought a little bit more on the sell-off, and it's just one of those stocks that it's not in my set it and forget it account, but it's really a company that I don't mind owning for the long run. And when bad information comes out, I'm not surprised that it sells off, and I'm not really emotional or upset about it. But I have to analyze it a bit and recognize that, quite honestly, their valuation is still a little bit elevated, ignoring the Warner Brothers Discovery stuff. I think the stock's fallen far enough to account for that. It's lost enough in market cap in terms of anybody's analytics of what they think they're taking on in terms of the debt and everything else. But dropping their growth from 15% to 12% is significant because they're a mature company at this point. They may not grow at the pace they were previously, which should impact their actual valuation levels. And even after everything else, I think they're still above a 30 PE, which is not so cheap for a company that's revenues are slowing. So to be fair, I wouldn't be shocked to see Netflix get into the 70s. Now they've bounced since the Trump thing went on, and I think last I looked, they were trading around $85 a share. But just so it's understood, like it wouldn't shock me to see it get down to a 18 PE. And I'd have to do the math to see where that drives that to, but I'm guessing somewhere around $70 a share, which in the back of my head is kind of what I've prepared for it. Now, I also think it's a great company that is going to be able to continue to grow, possibly at a slower pace, but I think they actually raised their monthly subscriptions, which is one of the things I mentioned in another video that is probably not a bad idea. I don't see anybody canceling their membership because Netflix bumped their prices up $1. I also think it's kind of recession proof. I don't really see, if we go through a rough recession, how many people are going to cancel their Netflix over $10 a month. I think they're more likely to cancel some other things that might be more expensive, because that's a good way to have some entertainment at a relatively inexpensive price. I think people might be less likely to go to the movies or go out to dinner or other things if they're really in a tight financial position before they cancel their $10 a month Netflix that's unlimited movies and shows and things like that they potentially enjoy. Now, my wife and I, years ago, when we moved from our old house to the new one, we ended up not getting cable for a while, saying we'll just test it out. We already have Amazon Prime, which, to be perfectly honest, their streaming pretty much sucks. It surprises me that they've never really put some real money in it to try to compete with somebody like Netflix, but they just haven't. I've never understood that. Either way, we had Amazon Prime, and I said to my wife, look, let's test it out. Instead of like getting the cable, we don't watch a ton of TV. We leave it on in the background. Let's add Netflix and leave it at that and cut the cable bill significantly. So instead of $200 a month or whatever cable was charging, we now went to Netflix, and we even did the one when it came out with commercials, and I think we were at $7.99, which my understanding is it's going up to $8.99. Well, it is such a savings, and we've never even noticed or really care. We have Netflix, and now we didn't even realize we had gotten a TV. Like Samsung comes with some channels. Now, these channels are not like live, or they're a little bit delayed, even the news and stuff. But what we recognized is we didn't watch that much TV. We didn't notice that we weren't even having cable anymore. And now we pretty much have Netflix, Prime, and whatever comes with the TV, and we're totally content with that. If there was a big economy slowdown, I really don't think we'd cancel the Netflix unless things got really bad. It's also one of the reasons I actually like the purchase of the Warner Brothers Discovery, is I think that adds a lot of content to their services. I think it creates an opportunity for them to be able to start doing more shows and potentially get into movie theaters and stuff that I talked about in other videos. Now, before I forget, I want to apologize for yesterday's live. Billy let me know he went to watch it and he got like 3 minutes into it and something happened and it didn't show any more of that. Somebody else was telling me they were trying to say hi in it. They sent me an email and that it wouldn't let it go through. I think something glitched with YouTube and it wasn't working. Because I also noticed that people were coming in and leaving immediately, and I was like, why is nobody watching today? I think there was a problem with what was going on with the recording. I apologize, because as you guys know, I really do love the live platform. I might keep an eye. I might try to do one tomorrow to make up for it, but I have a busy day, and I really don't think I'll be able to find the time to squeeze it in. So I haven't like prepared or posted in advance. I might try to find another day, but definitely like usual, Tuesday, 11 o'clock. I know the time sucks. I'm super selfish, but what are you going to do? We are who we are, and it is what it is. So yeah, hopefully somebody can show and make some comments. I'm sure Joe will be there to tell me how the world is ending and the markets are collapsing, and maybe he's right. Now, I did add 2 stocks from the call that got exercised into my set it and forget it account. As always, this is not financial advice. Please don't listen to me when making any investment decisions. I am not a financial advisor. I suggest that you reach out to a professional advisor, but always do your own research when making your investment decisions. Because, look, especially the guys on YouTube that are talking about 100% return and all this crazy stuff, guys, this is not realistic. People are just making stuff up to get the clicks, to get the likes, to get the views, to build their YouTube. You really have to be careful about everybody you're listening to, even me, to make sure that what you're deciding for yourself fits your investment portfolio. And you shouldn't be making any rash decisions following somebody's investment advice because, look, I like to think I'm okay at this, and we all make really bad decisions from time to time. I'm actually diversifying more and spreading out wider because my attitude is I'm going to pick some bad stocks. And as I'm getting older, I don't want to over focus on individual ones and potentially put too much into one thing and be wrong on it. Now, I know Ari Gutman has been like doing the opposite, putting in the 5 or 6 stocks. Now, to be fair, I think he's cheating a little using an ETF because I think that defeats the purpose. That being said, he notates Billy Ackman, who I get the strategy, but you know what? He and I and the other ones and you and everybody else, we do not have access to the CEOs and the other people in these companies like Billy does. He has information that we are not privy to. And being able to read the books and check the data and look at the things we have access to, you're kidding yourself if you have an insight into something that's beyond anybody or anything else. And the markets are pretty well established that the pricing is pretty accurate to what it is. Now, maybe it makes you more convicted to the things you believe in, but I would be really cautious about any advice from anybody on YouTube just because it has to fit what you want to invest in and your investment goals. Now, that being said, the 2 stocks that I bought, I am rotating out of growth type of companies. Actually, the one that the call got exercised on was a dividend stock that I had bought, but I'll get into that as well and explain why I was perfectly happy to sell it. But I moved into Clorox and Procter and Gamble. Talk about 2 super boring stocks. Now, Clorox has been falling off and having some difficulties primarily because people are shifting from the name brand to, more generic labels. And Procter and Gamble is about as big and boring as they come. Now, I'm going to take a quick look for those who like it and go into the financials. I have not done this in advance, so forgive that I'm like pulling it up on the computer and stuff. Clorox is trading $110 a share. PE is 17, but its year high is 164, which is part of what I liked about it is it's kind of near the lows. And I like the dividend. It's 4.5%. The stock that I got exercised on was Caterpillar. My theory on Caterpillar is it really boomed, and they're talking about the AI type of stuff because they're building the data centers. Well, Caterpillar is not an AI stock, and it does this from time to time. It gets out of favor, it gets in favor, and it just tends to go too far one way or another. I feel like it's getting a little oversubscribed. People like it too much, so I have no issue that I got taken on it. Even though I originally bought it as a dividend company that was growing, I was looking to more get out of some of the other stuff, but it shot up so much. I am perfectly happy to be rotating out of it into things that are paying a higher dividend. So the 4.5% yield is what I really was attracted to. But let's go look at the fundamentals and see what E-Trade has to say about Clorox and the numbers. So dividend yield 4.5. Payout ratio isn't as bad as I expected because I did a search that Gemini helped me with saying that they were pushing the limits, but it's showing a payout ratio of 76.99. So call it 77%. Now, forgive me, sometimes when I talk the numbers, I go really slow. That's primarily because what I've noticed is when I do the captions, when I put numbers in, it really messes with it, and it doesn't like tend to get that stuff right in terms of the words versus the number. So I start talking slow in hopes that I don't have to go there and start correcting it because it's a big pain in the ass. Annual dividend 4.96, which is why you're getting a 4.5% yield. Earnings per share, dividend, asset turnover. So these ratios, blah, blah, blah. Valuation, price to earnings, 17.21, which I told you, price to cash flow, 24.21. PE is lower than 69% of the companies in household products, which means people aren't willing to pay more. I think that's just because it's out of favor right now in the things I mentioned. I think Clorox has a tendency to go up and down like that, and it really isn't that big a deal. Return on assets 14.5, which sounds great to me for a company like Clorox, and 23 on investment capital. It says it's able to reinvest more efficiently than pretty much most of its competitors. So gross margins 44.28 and net profit 11.86. Again, I think that's pretty impressive for a company like them. Let me look at their balance sheet real quick. Sorry, forgive me. I know it's not a live and that it's just a normal recording, but I didn't do this in advance. Yeah, everything looks fine. And the only other thing I want to look at is insider activity. It does bother me. No, there's not a ton of selling. I was going to say if there's a ton of selling or something that looks out of line, there's only one back in September, and it's just an exercising of options. Other than that, it looks like some of them are actually buying it. Let's see anything big. Yeah, 4,000 shares. This one's a little bigger, but it's impressive that whoever Pierre Breber, he's a director, actually bought 4,000 shares and at a great price. So I like to see when somebody who's on the board is actually buying shares and investing because I think they see the value in it as well. So Clorox looks pretty attractive to me. Let's take a look at Procter and Gamble. So Procter and Gamble is about as boring as they come. I can't think of something that is less exciting to me. Uh, if I remember correctly, yeah, they're kind of near the lows, but in the middle of their range. PE is a little above 21, currently trading $145 a share. The high was about 180, so it does hopefully have some room if they can reverse. Their dividend is a little bit less. Let me find it so that I can tell you because I just know it looks like it's a little below 3%. Still better than 1% and change that Caterpillar was paying. And then let's take a look at the fundamentals and see if there's anything interesting. So their payout ratio is very attractive, at under 59%. All their ratios look well. Growth rate looks okay. Get down to the nitty gritty. Return on assets is pretty good. They're able to invest their earnings more efficiently than 85% of its competitors. For a company as mature as Procter and Gamble, that's impressive. And their net profit margin is almost 20%, which is really impressive to me as well. So makes me really comfortable with the companies that I'm buying as opposed to the growth stuff. I know they will underperform. It is not as exciting. But as I'm transitioning to try to get more towards retirement, I would rather have the dividends so I don't have to worry about selling off some shares of stock. Now, to be fair, to those who think that dividends are stupid, I get it. Like you're double taxed and you want, if you're looking to do the best you can do, you want to have the best companies that perform the best and shouldn't care about dividends. And these companies are not going to be the ones that perform the best, which is part of why I really mean it when I say don't listen to me. This is what fits me. I don't want to pay attention to it. I just want to have quarterly checks coming in from a variety of different companies where I don't really have to pay attention to how they're performing or what's going on. I will start to worry if they start doing worse or if they're not doing as well as a company. But overall, if they're able to pay those dividends and they don't have to cut them, it's okay to me. I'm not super worried about if it goes up in value or it goes down. I hope that they do better than inflation, but that's about it. And if the stock market is up 20% one year and my account is only up 8%, that's okay. I'm not looking to outperform at this point. Those of you looking to outperform, you have to take on more, I don't want to say risk, but more volatility. And those are the ups and downs that as I get older and closer to retirement, I don't want the ups and downs because if they come at the wrong time for my age and my life cycle of where I am, I just don't want to be in the position of having a 50% drawdown because there's the pullback that like there will be a correction at some point, and I don't want to be stuck with a bunch of growth stocks that have huge corrections at the wrong time as I get closer to retirement. I hope that makes sense for everybody. And I would rather own Procter and Gamble and Clorox, and I think I have a tiny bit of Whirlpool and Starbucks and trying to think of the other, Pfizer and Bristol Myers, just trying to think of the dividend stocks. But I think I would rather have an amalgam of those than have a higher percentage of bonds and things that are just like safety nets that'll pay a percentage yield, but they're not going to go anywhere. Anyway, as always, maybe don't hit the subscribe button. You don't have to hit the like button. I hope you enjoyed the content. I hope you didn't mind the politics stuff because I really mean it lightheartedly. Um, I think Trump's kind of funny. He makes me laugh. It's not an opinion on him or the world or anything else. And people get a little too worked up about it. For those of you who haven't seen the Social Dilemma, I'm not going to go yet. Watch it. I watched it years ago, and we watched it again with my son recently. It is a great program that talks about how social media causes a divide. And you watch the show and you recognize how old it is because when you see Chamath Palihapitiya, you recognize how long ago it was done, and you start to look at some of the pictures in it and their predictions of what's going to happen, and it's kind of what's going on now. Unfortunately, social media helps divide us. It makes us more, right wing, left wing, more extreme, and everything else. And everybody is getting so extreme about these things. It's just a little too much. Understand, like, I'm really lighthearted about it. I'm not super this way or super that way. The only thing I am super this way or that way about is the ones that are way too far on one side or the other. They need to come into the middle and settle down a bit because nobody is right or wrong when it comes to this stuff. There's opinions, but there's a middle ground of being okay and accepting that there's good and bad with all of it. Like, the ice stuff. Like, there's good to some of it, and there's bad with some of it, and the way that things are done. Maybe you like it, maybe you don't like it. Nobody's right. It's just an opinion. Anyway, again, feel free not to hit the like or subscribe. If you do, that's great as well. I'm not super concerned how the channel does. It's just my place to vent and gives me something to do as I work less and less. Have a great, what day is today? Wednesday. I feel like Tuesday because the market's open late. Have a great Wednesday. I will probably do another video soon.